Hello everyone, welcome to the Finhancers midweek podcast. I'm Adarsh, the founder of Finhancers, and today I'm joined by a very special guest who is the CEO and founder of cPROFIT Wealth Management Pvt Ltd. I'm joined by Miss Vanitha C K. How are you doing, ma'am?
Hi everyone, I'm always doing fine.
Pleasure to talk to you. So today we are here to talk about something very, very important. We're here to talk about our reaction to the tariffs that have been imposed by the United States recently by the Trump administration. So let's get this thing going. So we're going to discuss about the impact the US markets have had in India in recent times. And of course, President Donald Trump has slapped us with a huge tariff. But of course, we are not the worst in the situation. We've had countries that have done even worse, or rather have had it even worse, be it China. And I'm joined by a man here to discuss about what's happening here. Please tell me, Ms. Vanitha, what do you think about the tariffs that have been imposed by the Trump administration? Clearly, we've been slapped with 26% on all exports. And what is your reaction to this?
Yeah, of course. See, just one is it will have significant implication for India's economy undoubtedly. And one more thing to look at is probably our Esther Governor Raghuram Rajan has also stated as a self-goal. The reciprocal tariff is a self-goal. Says that India's impact will be very smaller, and it happened in this way. Just they didn't slap only India. Of course, right across the globe, be it European Union is slapped with 20%, and probably that is 18.5% of the share of the US imports, and China with 34% being the highest, and that is again the share on US import is closer to 13.4%. In the same way, you look at Japan with 24%, Vietnam with 49%, and Taiwan with 32%, Thailand with 37%. See, just look at all those things. Yes, 26% is phenomenally high. And one more thing that you will have to just look at. Say, just President Donald Trump, he himself indicated that India charged 52% tariff. Okay, including currency manipulation and the trade barriers. So, he has slapped only 26%. In fact, he has been good enough on us. And then one more thing to just watch here is, he has very clearly stated during his speech that they are open enough for any kind of negotiations. That is what every country is trying to talk to. And India, some of the sectors, say like textiles, ceramics, and auto components, and maybe inorganic chemicals, and shrimps, steel, and such kind of sectors are getting affected with this one.
This right now, how is an average Indian, or India in general, because an average Indian may not be affected by this, but as a country, our exports will certainly take a hit. How do you think India is reacting to this right now, and what is your opinion on that?
Yeah, if you have to just put it on the realistic figures, right, India's exports to the US is likely to reduce by 12% with this one, maybe just at the outset. Maybe again, if you put it in terms of money, it is going to have an impact up to an extent of $1.78 billion. And the key sectors, as I told you earlier, maybe iron and steel, it is likely to fall by 18%, and diamonds and gold expected to decline by 15%, and vehicles expected to decrease by 12%. Electronic goods are likely to fall by 12%. See, just all these are like a kind of expectations that are there in our mind. And what US government is trying to say is, yes, that is, I buy from you, you also buy from me. Say, just energy is one such sector which you can focus on me, because India right now has been just importing oil from Russia and Middle East and all, right? Instead, right, you buy from me. Right? That's what indirectly US is trying to state.
Obviously, they're trying to create a relationship of give and take here, without a doubt. And as a result, the reciprocal tariffs have been imposed. But clearly, India has been affected, or rather, we won't be affected as significantly as you spoke about the former governor Raghuram Rajan's comments. But there are a couple of sectors that have taken a hit here. We are talking about the auto sector, we also have the textile sector, but let's talk about the auto sector, which has been imposed a tariff of 25%. One of those industries where a lot of people are employed today, and certainly it's expected to take a hit. What are your thoughts on that?
Yeah, it could definitely disrupt bilateral trade worth of $129 billion kind of dollars. And of course, the challenges are there for the, especially for the Indian exporters who rely heavily on the US market. Yeah, that is definitely going to be there. And as I said, just it is right time for US to just focus on its measures, because their external, that is the overall debt, is hovering around $36 trillion, which is equivalent to 123% of their GDP. The debt to GDP is phenomenally high in US, and as such, US has to take some sort of initiative to come out of it. Otherwise, people who live in US only, they are not buying their products, right? So this is like a very a tough call taken, so that they will try promoting their products, right? And again, you look at pharma and other thing. He just already just waved off stating that because the generic medicines basically just goes from India, right? So there are few sectors which he has also just kept in mind, and as I said just right, they are open enough for kind of negotiations. Anyway, we'll talk about the worst and just come to the best.
Yeah, even today, I think the Minister of External Affairs, Mr. Jaishankar, was talking about the fact that they would love to conclude the bilateral trade agreement by the end of the year, no
Right.
matter what. So that is obviously a positive sign. Obviously, the US is more than welcome to come sit down and discuss with us, which I believe plays a huge role in the grand scheme of things. And it also goes to show the kind of relationship that we have with the Trump administration as of today and the United States as a whole. So coming down to other sectors that have taken a hit, of course I know that we don't have to get completely sectoral here, because obviously India will get affected. There are certain sectors that will certainly be impacted, but I'm sure the Indian population would like to know what are the other sectors out there that have been affected, and what is your take on that in general?
It may not be a direct impact. Just one is right, the escalating tariff obviously just will impact the complete global supply chains, and it will curb growth. Undoubtedly, just already the projection of the global growth has diminished a bit. Even on the emerging countries part also, it is not going to be the range of 4% plus. The growth rate of the globe is just getting down to 3% plus, and which is one impact. And when you just say this, like the prices of products are just going up, even in US, that means the inflation is going to go up in the US market. Here, the stoked inflation is one thing that will be just apparently be across the globe. That's one thing. And then we don't know how many more countries will try to just retaliate US for this. That is something we don't know. Again, as he spoke about the other sectors that are going to get impacted, maybe the tariffs are going to impact steel and aluminium, which in turn will affect industries like automotive, construction, and manufacturing and all. Right, so that is one of the reasons. So, as I said, even in the US, the inflation is going to be high. Maybe because of that also, Raghuram Rajan suggests it's going to be a self-goal as in football. Right, so it's going to backfire them as well, undoubtedly.
Without a doubt. So when it comes down to, say, we have the information technology industry as well as the healthcare industry, both of which have obviously escaped the bullet here. They have not taken a hit whatsoever. Do you expect these sectors to be affected in the future by any chance?
See, just when you talk about information technology, see, just when the inflation is high, the consumption in the country is going to be low. When the consumption is low, even from the corporate side, the spending is going to be less. So when the spending is less, obviously just right, the IT spending is also going to be less, right? So as such, actually just even though that apparently just US has exempted the IT and healthcare sectors, it is going to have a indirect impact, right? So just any corporate for that reason would not heavily spend on IT. So that is one kind of forecast, and as such actually this time we even expect the IT as a sector will not give a quality kind of increments to the employment force is what we are feeling.
And obviously it's also one of those industries, or let's talk about the IT industry or the healthcare industry. Obviously it does not employ as many people as that of maybe say the automobile industry or perhaps the textile industry. So there's not as much of an incentive for the US to impose tariffs on these sectors, and obviously we are majorly relying on them.
Yeah, right said Adarsh, because one is right, automobile, auto industry and then textile, they all just employ huge numbers. It is definitely going to have an impact on the employment opportunities and then the growth of the employees. It is definitely going to have an impact, but it may not be very significant like in other countries. For India, it is relatively going to be better, because even otherwise, India imports capital goods and oil and gold. Gold to a great extent we try just bringing it down, and then oil is something they are expecting us to just take from there, and yeah, that is the thing.
So now there's a common opinion going around that now that China has been slapped with a tariff of 34%, and India being slapped with only 26%, which is the least compared to the compared to our South Asian peers.
Now, Adarsh, I can understand as what question you are going to ask me next, because China has been slapped with a 34% tariff, and which will definitely impact China's markets as well. But don't think that it would create an opportunity for India to exploit, as the trade dynamics are very complex, okay, and it is all driven or influenced by multiple factors. So I don't hope to see India getting benefited and all in a very big way. To an extent, maybe just right, our Indian government will also try to focus on segments wherever they could exploit. So at this point of time, I don't hope to see a bigger kind of opportunity for us there.
But with that said, there are other opportunities or doors that it does open, without a doubt, because every crisis, as they say, comes with an opportunity. So what kind of opportunities do you foresee India having, or India can probably capitalize on during a period like this?
See, just right, I won't exclusively say others are, as the challenges are much more for India as well. So when you talk about the Indian market corrections also at this point of time, it is not only because of the tariff war. It is also just impacted by several other factors, stating that our corporate earnings are not in tandem with the market capitalization, I would say. And again, actually, just maybe the inflation is slightly just tricky to just manage at this point of time. And then the FII outflows have been significant, right? Maybe just close to 1,15,000 crores worth of outflows have happened in October alone, October 24 alone. Valuations, despite all those things, all these market corrections, still you look at the price to earnings of the Indian markets are hovering around say 22 to 23. So that's there. So when you talk about the other sectors that are going to get impacted, maybe just considering all those things, banking, right? Banking is one sector which is going to get impacted, right? Because of high inflation or the interest rate kind of volatility may impact that sector badly.
So right now, how are other countries reacting to this? Because we spoke about China, so now let's talk about the global markets. How are other countries reacting to this at the moment?
So as I said earlier, right, all are willing to just have a discussion with yours, and as I said, even in the President Donald Trump's talk itself, he has just encouraged the discussion on the negotiation. So almost all countries are trying their level best to just maybe just bring in a healthy discussion which is going on. And other than that, every other country will just try to just diversify its trade avenues as known. And then they will also just reduce the reliance only on the US markets. Maybe just it's all like a lesson or learning from them. And then they will try to negotiate, as I said earlier, the better trade agreements. So I think that is something which other countries are focused on at this point of time. And yeah, that's how it is.
So I want to quickly come to the last question for today, because we are overshooting time, and at the same time your time is of the essence, without a doubt, so I'll not take too much of your time. I just wanted to ask one question. So to our investors, how do you think our investors, or how do you think an average investor should be reacting to a situation like this at the moment? Because clearly there's a lot of panic in the market. Markets have corrected quite significantly over the last 6 months, and ever since Trump announced the tariffs, markets nosedived. So clearly, how do you think investors should react to this?
See, first is right, we can control only the controllables. There are external, there are internals. So when you look at the external factors, I cannot just go dominate the Indian markets or global markets. So what I can control, what is there within my limit is my goals, my investment horizon, and my risk-taking ability. So considering all those things, every investor should just meet an advisor to ask us what kind of asset allocation they need to just adopt as per the investment horizon and the goals and the ability, right? So a lot of long-term opportunities are there because every correction is an opportunity, right? Within India also you have got huge surplus coming in. Maybe just if you look at the, when you talk about the FII outflows, you have to talk about DII inflows as well. And we are not completely dependent on FIIs at this point of time in Indian markets. Other one is, see just right, we also expect a sector rotation, right? And with IT or FMCG sectors being more resilient, so we'll have to wait and watch. So at times of crisis, right, large cap will be the savior, right? So just people can have slightly just more exposure to large cap because they are relatively available at a low valuation. Having said that, if their investment horizon is long, based on the kind of other parameters that I have just told, they need to meet an advisor and then they need to see as to just whether they could add more weightage to their portfolios. Whereas otherwise, it's a very, very opportune market for India, is what I would say. And again, I will not say just right, the volatility is, we are done with that. So a lot more to come. So one should stagger their investments over a period of 3 to 4 months to get benefited with the market volatility.
Wonderful. Nice to hear from you. And obviously, during times like this, only during times like this, money is made in the market. So one has to be very, very patient, panic less, and be very, very conscious about the decisions you are making, because only during moments like this, money is made. So obviously, consult an advisor, do your due diligence, and obviously, no part of this discussion that we have had today shall construe as financial advice. We wanted to keep that in mind. So that's pretty much it for this week's episode of the Finhancers Midweek podcast. I'd like to quickly thank Ms. Vanitha for joining us. We hope you had a wonderful time. Thank you for coming over and making this an incredible episode. We'll see all of you next week. Thank you.
Thank you so much.